Imagine a world where your money has an incredible ability to grow exponentially over time, leading to unimaginable wealth. Today, I want to introduce you to the captivating concept of compounding, where even small investments can lead to remarkable financial achievements. Let's go on an exciting journey to explore the secrets of compounding and equip you with the tools to transform your financial future. In the world of personal finance, one concept stands out as a proven path to long-term wealth creation, and that's compounding. Compounding involves reinvesting your earnings and allowing them to generate additional returns over time. By harnessing the power of compounding, you can potentially accumulate significant wealth and achieve your financial goals. In this video, we'll dive into the principles of compounding, its benefits, and discuss some of the best assets for compounding that can pave the way to financial success. Let's talk about compounding and why it's often called the eighth wonder of the world. Compounding is the process of reinvesting your profits, dividends, or interest earned on an initial investment, allowing them to generate even more returns over time. The magic of compounding comes from earning on both the initial investment and the accumulated returns, which accelerates the growth of your money over time. To understand its power, let's consider an example. Suppose you invest $10,000 in an asset with an average annual return of 8% for 30 years. In the first year, your investment grows by 8%, adding $800 to the initial $10,000. The new total becomes $10,800. In the second year, the 8% return is applied to $10,800, resulting in an additional $864, making the total $11,664. As the years go by, the compounding effect becomes more significant and the growth potential increases. After 30 years, that initial $10,000 investment would have grown to approximately $100,626. This is because the interest is not only earned on the initial amount, but also on the interest from previous years, dramatically amplifying the growth potential of your investments over time. Let's talk about compounding and the 8 best assets for long-term wealth generation. First up, we have high-yield savings accounts. These are bank accounts that offer a higher interest rate than traditional savings accounts. They are a great way to start compounding wealth, as they don't require a large initial investment. Though the returns might not be as high as other investments, they provide a safe and easy way to grow your money. Let's say you deposit $10,000 in a high-yield savings account with an annual interest rate of 2%. Over 10 years, assuming the interest is compounded annually, your investment could grow to around $12,189. The interest accumulates over time, contributing to the overall growth of the account. High-yield savings accounts are perfect for short to medium-term goals, or as an emergency fund. They allow you to preserve your capital while still benefiting from the compounding effect. Plus, many of them offer online banking, making it convenient to track your progress and manage your funds. Investing in stocks is a popular way to use compounding for long-term wealth generation. Historically, the stock market has outperformed many other types of investments over extended periods. Companies with consistent growth, strong finances, and a competitive edge tend to offer higher returns in the long run. By building a diversified portfolio of strong companies, you can take advantage of compounding over time. Stocks have historically provided average annual returns of around 7% to 10%. Another compounding asset is dividend-paying stocks. These are shares of companies that distribute a portion of their profits to shareholders as dividends. Dividend-paying stocks offer the potential for both regular income and capital appreciation, making them attractive for compounding. With dividend-paying stocks, you receive regular income through dividends, which can be reinvested to buy more shares and accelerate the compounding effect. Additionally, as the company grows and becomes more profitable, the stock price tends to increase, leading to capital gains. By reinvesting dividends and letting the shares appreciate over time, you benefit from the compounding effect on both income and capital gains. When choosing dividend-paying stocks, consider factors like dividend yield, payout ratio, and the company's financial health. Well-established companies with a history of consistent dividend payments and a track record of increasing dividends are generally considered reliable choices. Dividend aristocrats, companies that have increased dividends for at least 25 consecutive years, are often favored for their reliability. To demonstrate the potential wealth creation with dividend-paying stocks, let's say you invest $100,000 in a diversified portfolio of such stocks. Assuming an average dividend yield of 3%, you would receive $3,000 in annual dividend income. Over time, with an average annual stock price appreciation of 5%, holding the investment for 20 years would lead to substantial growth earnings of $278,647. Real estate investments, especially rental properties, can be a great way to use compounding for consistent cash flow and property value appreciation over time. Rental income can be reinvested to buy more properties, diversify your real estate portfolio, and increase potential returns. Real estate investment trusts also offer a passive way to invest in real estate and benefit from compounding. For example, if you purchase a rental property for $200,000 with a 20% down payment and obtain a mortgage for the remaining $160,000, and the property generates an annual net rental income of 6%, with an average property value appreciation of 3% per year, your total return on investment after 20 years could exceed $500,000. Bonds are mutual funds that are debt securities issued by governments and companies to raise funds. Although bonds offer lower returns compared to stocks, they are considered safer investments. Bonds provide a regular income stream through interest payments, which can be reinvested to compound wealth. Reinvesting the interest allows investors to earn interest on their interest, leading to compounding growth. For instance, if Mark invests $100,000 in a bond with a 5% annual interest rate, and the bond has a maturity of 10 years with interest paid annually, by reinvesting the interest each year at the same 5% interest rate, Mark's initial investment could potentially grow to a higher value over the 10-year period due to the reinvestment of interest. Both real estate and bonds offer opportunities for compounding and can contribute to long-term wealth accumulation. By reinvesting the earnings from these assets over time, you can harness the power of compounding to achieve significant financial growth. Investing in precious metals, like gold and silver, can be a smart addition to your investment portfolio. Precious metals have a history of retaining value and acting as a safe haven during economic uncertainty. While they don't provide regular income like stocks or bonds, their value tends to appreciate over the long term. It's recommended to allocate around 5 to 10% of your portfolio to precious metals to hedge against inflation and market volatility. Index funds and ETFs are investment options that track specific market indexes, like the S&P 500. They offer diversification across various assets and allow you to benefit from overall market growth. By consistently contributing and reinvesting dividends in these funds, you can take advantage of compounding to build wealth over time. Retirement accounts, such as 401ks and IRAs, offer tax advantages and opportunities for compounding growth. Contributing consistently to these accounts and investing in a diverse mix of assets can help you build wealth within a tax-efficient framework. The key benefits of compounding are exponential growth and the power of time. The earlier you start investing, the more time your investments have to grow and compound, leading to significant wealth accumulation over the long term. Passive income compounding allows you to generate money without actively working for it. By reinvesting your earnings, you create a cycle of generating more returns, which can be reinvested again. This passive income can provide financial security and freedom as it continues to grow over time. Compounding also helps protect against inflation, which reduces the value of money over time. Investments that generate returns above the inflation rate can preserve your purchasing power. Watching your investments grow over time can instill discipline and patience, helping you avoid impulsive decisions based on short-term market fluctuations. This mindset is crucial for long-term financial success. To benefit from compounding, start early. Diversify your investments and reinvest your earnings. It takes time and discipline, but it has the potential to make you financially secure and even wealthy over time. Take control of your financial future and watch your wealth grow.